Well, ladies and gentlemen, this is Greg Michalowski, and this is the Daily Forex Report for Equities.com. When you trade in the markets, there's often events that cause movements. Some of those events are economic events. Some of them are as a result of central bankers, change in policy, or central bankers speaking. Some of the events are tragedies, and as you learn how to trade markets, you need to be able to react and understand how to interpret and benefit or stop losses from occurring when these events randomly occur. Today we had a tragedy. We had some bad news in that a Malaysian Airline crashed in the Ukraine, on the eastern side of Ukraine, bordering on Russia. And the news came as a shock and a surprise because it comes less than 24 hours after economic sanctions by the US and EU on Russia for their involvement in this Ukraine situation. And so immediately the market started reacting in a negative way. Was the plane shot down? Did Russia shoot it down? Was it in response to the sanctions? All these questions started to be asked, and oftentimes the market doesn't wait for answers. It'll simply react to the events. And so as a trader, what are the effects of such thinking of traders? And I've outlined 4 different effects of an event like this tragedy that occurred today. One is that you tend to get a flight into the relative safety of bonds. In particular, the U.S. bonds tend to rally. That seems to be the safe haven bond market where the market money goes. A second effect might be that the stock market moves lower. Stocks don't like bad news. This is bad news. And so there is the Pavlovian reaction where the bell rings is bad news and the stock prices go down. The third effect is that gold moves higher. There is buying in gold. Gold is a relative safety instrument. It's a safe haven currency, if you will. And so you get these automatic flows into gold. And in the foreign exchange market, the flight into safety is manifested through the buying of the Japanese yen. The Japanese yen is considered a safe haven currency. If things are going bad, if stock markets are moving lower, if there's bad news, then you're going to get a flow into the yen. And the opposite tends to happen when the stock market rallies strongly or there's good news. You tend to get a movement out of the yen. So how is that manifested in a currency pair like the dollar versus yen? When the dollar yen goes down, that means that the dollar is going down and the yen is going up. So if the yen is going to be the safe haven where money flows, when the dollar yen goes down, that's the equivalent of buying of the yen, selling of the dollar, buying of the yen. And so let's see how the markets actually reacted today by looking at some charts and some charts of these instruments. And looking at the 10-year bond, the bond yield did in fact move lower. Yesterday we closed at a rate of about 252. The day before we closed at a rate of 255. So the rates are down about 8 basis points. It's not that much. You would expect, I think you may have expected a little bit more, or I would have, but nevertheless, it is in the direction of the downside. So we're seeing the flows into bonds. What do you expect in the stock market? The stock market should go down. The stock market doesn't like bad news, so the stocks go to the downside, and all the major indices are indeed down today. Hit hardest in the European stock market. Euro stock is down 1.41%, here today. I'm looking at the Dow now. It's down 76 points, and the Nasdaq's down 39. So a little bit more than when I took this picture a little while ago. So the stocks are getting hit in the United States as well. S&P is down 12.82 currently at the moment. So stocks are getting hit, and that's what you'd expect when bad news comes out. Gold prices. This is a chart of gold versus the U.S. dollar. It's a 5-minute chart. And from before the event to after the event right here, the price moved from about $1,298 to $1,323. So a $25 move to the upside. We've since seen the price of gold come down a little bit to around the 38.2% retracement level, where the market is finding some support against that level. Typically, I like to see the price stay above the 38.2 to 50% retracement of a trend-like move. So as long as the price can remain above this level, that is keeps the bulls in charge here for gold, and says that the market is still concerned about the effects of the event. And finally, in the dollar-yen, we've seen the dollar-yen move to the downside, the yen move to the upside, the dollar move to the downside, and that has sent the price down from the 100 and 200-hour moving average and topside trend line to and through the bottom side channel trend line, and the market's staying below that level, keeping the pressure on the dollar versus yen. So what we're seeing in all these instruments is the effects that you'd expect. Bond yields to the downside, stocks moving down as well, gold prices moving higher, and the selling of the dollar-yen. If you didn't know these effects, hopefully the next time when an event, whether it be good or tragic like this one, occurs, you'll be able to react and understand why the market is doing what it does. If you like this report, please go to equities.com page and click on the follow button here under my name. I'm new to equities.com, so I need more followers. I only have one, so feel free to hit that button. Also, for more information on trading foreign exchange, you can also find my thoughts and comments at GregMikeFX.com. Put your name and subscribe as well. I'll be happy to send you information about what I'm up to in my business model. Good fortune with your trading. Bye-bye now.